Hello and welcome to the Crypto Jungle. My name is Baloo The Bear, and here on the channel I teach you how to trade and invest in cryptocurrency using the Wyckoff method. With our simple trading strategies and simple analysis, you're going to be better prepared to navigate the crypto space as you learn to trade and invest without all the noise, without all the indicators, without all the bull crap. So if you're new here, hit the subscribe button. We stream 3 days a week, and without any further ado, let's just get right into it. Let's start off with Bitcoin on the daily. Taking a look, we just got our daily close on the daily chart. Daily close on the daily chart. Not the strongest close I would like to see. We are struggling with this very powerful $50,000 resistance. This shouldn't come as a surprise to you. The entire crypto space is talking about this $50,000 resistance. So this area right here, which is 49,890 on my FTX chart, is a big resistance. We did get above it, but we got pushed back down below it and closed. The only good thing is that we got a daily candle close that was higher than the last candle close, but it's still not showing a ton of ability to overcome this resistance. If we take a look at the volume here, we did see an increase in supply, so there was trading activity to the sell side for yesterday's candle. So yeah, we're struggling. So don't be surprised if we do get a pullback, but you know, I am fully positioned to the long side. Well, I do have some cash on the side in the event that we do go down. You always need to have some dry powder in the tank, or dry powder getting ready for any move, whether it is up or down, if you are trying to trade and invest. But the space is looking good, the structure is looking good, the strength is looking good. Even if we get a retrace down to $36,000, which I don't think is likely, but even if we did, I would still be bullish on the chart overall. So let's take a look at the weekly chart and get kind of a macro approach, because we did get another nice weekly close here. This is a very strong trend. Let's actually just hide the drawings for a moment here. We got our weekly bullish cross, which is a very strong signal on the alphanumerics indicator here, showing that we have definitely momentum to the upside and a potential for a trend continuation. If this is our high, this is our higher low. So as long as we can keep ticking to the upside and get above that magical number right here of 58,120, give or take, we would be looking really, really good. So Gemini Viking, how is it going? Welcome. So yeah, we still have plenty of time left on this weekly candle. The thing about weekly candles is we can get a little bit of ebb and flow. Do we come back down and test the 7 EMA somewhere around 44? I think that would scare a lot of the market, but you know, the trend is your friend until it ends. And when we go back to the daily and take a look, you know, it's higher highs and higher lows. You know, if you want to keep it really simple, we can just draw a trend line along the lows, right like there. We have a little bit of room to the downside to maintain a highly bullish posture inside of Bitcoin currently. Whee! Slam free poetry. Good morning, Patty. Good morning. Morning if it's morning for you. It's morning here in Indonesia. All right, so that is Bitcoin. I'm liking what I'm seeing. Let's take a look at what's going on with Ethereum. Ethereum is looking not bad, actually. We got a nice close here. Did we get above this? Let's actually zoom into this area right here. Let's drop a horizontal ray at the last close. Yes. Nope. We closed just below it. So not super confident moves. We're not seeing those, you know, solid confirmations where the market's like, yes, we're ready to go. So maybe another day, maybe another week, who knows? But I'm still overall quite bullish on what we're seeing here in the charts. Taking a look at Cardano, everybody's favorite cryptocurrency. Cardano's looking fantastic. We did, you know, fundamentals aside, I can put away my differences with the fundamentals and my own thesis on what I think about Cardano. I think it's useless. But be that as it may, the market doesn't, and the market is overvaluing it, and the market is buying it. So it is heading to the upside. Very strong rally. Now, if if you're sitting and you're not holding a Cardano position and you're wondering to yourself, should I buy Cardano? I highly recommend that you wait at least until the launch of smart contracts to see how things play out, because I feel as though, you know, when there's a big news event, you have the market participants that are interested in the event and they want to become a participant prior to the event, prior to the launch. But then you also have the whales and those that don't care about the future of the protocol also jumping in, promoting, you know, giving the project hype, giving it, you know, price appreciation, only to just, you know, take their profits. They're not interested in the long term. So they're just, you know, riding the hype, because we've got quite a, since the breakout here of this channel, we've got, you know, we're up almost 100%. So for a whale with multi-millions of dollars, it's a pretty good position. They'll cut it because it's, you know, typical buy the rumor, sell the news type structure. A lot of people say, you know, how can you tell when something's buy the rumor, sell the news? Because we had EIP 1559 end up being quite bullish for Ethereum. So people are saying, well, EIP 1559 was bullish for Ethereum. Why wouldn't smart contracts be bullish for Cardano? In my experience, on my own observations, what I've seen is basically when there is a rally into the event, typically there's a sell-off at the event. When there's no rally or stagnation into the event, typically the event becomes bullish after the fact. So buy the rumor, sell the news is another one of those contextual decisions. Slam Free Poetry, when to sell Cardano, basically just let the price decide. Okay, so when smart contracts are released, you might want to just lock in some of your profits. There's no point in killing a winning trade. There's no point in killing a winning trade. So use stop losses and use other tools at your disposal when in your trading platform to allow the price action to decide for you. Hold on to your winners. Don't ever close a winner fully unless it meets one of your parameters for selling. So use stop losses, use moving average crosses to make decisions. Whatever the strategy that you choose to use, follow through with that strategy. Moving on, let's take a look at VeChain. VeChain, kind of stagnant, breaking out of the channel, but pretty stagnant. XRP, another one that always looks ready to go that never goes. Harmony, it's looking boring. Let's take a look at SLP. So SLP is one that is this is, for those who don't know, we're very involved in the Axie Infinity ecosystem. My God, gotta finish my coffee. And SLP is the currency that is issued for playing the game. A lot of interesting things going on in the ecosystem. They're trying to balance the economy. Currently, there's more SLP that is minted than is burned. The founders like to keep a equilibrium between those two forces. They want to see the same amount of SLP burned as there is minted. That's kind of their goal, or close to it. So currently, we are kind of out of whack. When more SLP is burned than is consumed, the price goes down. So we are in a downtrend. Our assumption is that the price of SLP will continue to decline until some sort of fundamental change in the drivers of demand occurs. So we'll have to see what that looks like. They have the founders have a few projects that they're going to be releasing soon. Hopefully within a month or two, who knows? But yeah, we could probably see some bullish price action if those types of events are launched sooner rather than later. If you've been holding, SLP looks like a ski slope. Yeah, it looks like a downhill ski slope for sure. $1 before the crash held through it. $1 before the crash held through it. Oh, you're in since $1. Gotcha. Where were you at 5 cents? You weren't here yet. Okay, if you have been holding ETH spot since 1600, when would you take profit? I'm still bullish until late fall. So basically, you need to formulate some sort of a strategy that's going to exit that position. What we teach in the Traders Academy is we have different strategies for different time frames to allow you to do different things. So one of the strategies we employ is the 3 time frame strategy. So we have a entry and exit time frame that's typically on the daily. We will have an add position strategy time frame on the 4-hour, and we will have a take profit strategy on the 3-day. You could also do it on the daily as well. But basically, you know, if I'm looking at Ethereum, the most important thing for you to, oh, Ethereum's looking not too bad. Zoom out, go to like, yeah, we could do it on the daily. But if you're in from 1600, which I don't know when you got in, but very well done, you're gonna place multiple stop losses. You don't ever have to physically close the position. When we see a blow off top, it's gonna be pretty obvious, and you don't need to be a part of my VIP for me to be shouting blow off top. I'm gonna be pissing off the whole market, saying that the cycle is over when indeed that moment occurs. But yeah, it's about structure. Price is completely irrelevant. That's one thing that a lot of people get wrong when they are trying to interpret price and they're trying to formulate strategies and they're trying to, you know, make plans like, if this gets to this price, I'll close the position, which is fine. You know, if you're closing the position in profit, that's fine. But for me, price and time are completely irrelevant. It has to do with the structure of the candles. So while you're making higher highs and higher lows, you maintain that trend. While you're making higher highs and higher lows, you maintain that trend. And at every low, you can place a stop loss. So if we entered here, we got a high, we got a low, we make a stop loss here, we've locked in that profit, we get another high, we get another low, we lock in another one. Instead of taking profits, you just place stop losses. And that way, you're locking in gains along the way, you're allowed to carry the whole position, you can trim profits manually, you can do a lot of different things that allow you to realize gains with zero risk. You know, if you get into a winning trade, there should be zero risk. You should have nothing but a winning trade at that point. If you are, you know, the recipient of gains on an uptrend, strategy and management of the trade is really, really important. And if you guys are wondering how to strategize and how to make better decisions utilizing these platforms, utilizing these tools that are available to you for you to protect your positions, then I encourage you to join the links down below. Use the coupon code WELCOME to get 50% off your first month in the Traders Academy. Honestly, we will teach you a ton in 1 month. So, you know, you certainly don't have to stay. I encourage you to join for at least a month so that you can kind of learn the basics, formulate a strategy, and be on your merry way. And speaking of the group, shout out to Standard Practice, who made an incredible gain using our strategies, using our techniques, and more importantly, mindset and mentorship. The virtual classroom is one of the most powerful aspects that we have in the group. It's a place where we're able to come together, focus on mindset, focus on strategy, and help you learn how to trade. We are not a call out group. We are not a trade setup group. We are a group that is going to teach you the skills that you need to form your own strategy so that you can not even need us anymore. The goal of the group is to get you in, teach you, train you, get you out. So shout out to Standard Practice, who turned $5,000 into $55,000 in less than 1 month. So you know, he's giving me a lot of praise here, but honestly, Standard Practice, this was you. You have been in the group, slugging away, really diligent with your study, really diligent with your ability to form your own strategy, you know, come up with your own approach and, you know, question tons of questions. You've been a real asset to the group as a whole, and you deserve that win. So congratulations to you, Standard Practice. Anyways, that is the plug. That is the plug for the group. Join the group, had no idea. Now I'm making safe and strategic trades. Thank you, DC77. Thoughts on XLM. So from a fundamental standpoint, I don't really see the point of both XRP and XLM from a fundamentals, but fundamentals are kind of going out the door at this phase of the price cycle. So traditionally speaking, XLM follows the structure and sentiment of XRP, although it's in a better financial situation than XRP because XLM is not currently in a lawsuit. So we got our bullish cross on the alphanumerics indicator. This indicator comes free with your membership, by the way, and we're in an uptrend. So it structurally is kind of lagging compared to other assets that have a little bit more hype behind them. But what's interesting about these types of projects, right now, everybody's kind of making money in the projects that require a little bit of crypto knowledge to get your hands on, whether you're using a DEX, whether you're using, hell, even just Binance is more advanced than the typical retail that ends up coming in at the later parts of the cycle. So when we get to the later parts of the cycle, say we get a break above $60,000 in Bitcoin, people are not going to spend time learning, even how a normal trading platform like Binance works. They're not going to be on FTX. They're going to be on Coinbase, and they're just going to be on, the very simple platform where it's like, hey, buy this here. So a lot of the tokens that have very well developed fiat onboard or on-ramps, those are going to be the coins that perform well. So if the coin is very easy to buy, it's going to do well. XLM falls under that category. XLM is one of those coins that is very easy for somebody brand new to crypto to buy. So although its momentum is low right now and it's structurally lagging a lot of other assets inside of cryptocurrency, I see its adoption curve being a little bit quicker just because the on-ramps are already set, they're ready to go, and it's very easy for people to buy XLM. Do you go blind by using this chart? Do I go blind by using this chart? No, I go blind by using this chart. My weak basement eyes can't handle it. Oh my goodness. Take it away. Take it away. Oh, okay. Whew. That's better. That is better. No, I don't go blind using this chart. You have your trading portfolio, but you will be taking profits from your hard wallet holdings or long-term holdings at the possible blow-off top, or what you presume to be the end of the cycle. Do you have a percentage of holdings that you will never touch? Yes. So I have so many fucking wallets. It's ridiculous. But my ledger, I have a cold storage. That's the 10-year investment plan. So when I make gains in the trading accounts, when I make gains in the DeFi accounts, when I'm transferring over funds to cold storage, it's done. I don't touch it. So even after the blow off top, nothing is going to be touched there. And it's just because of the simple part of my strategy that we never know. We never know the potential. We never know the outcomes. We never know. Based on the past, we have 4-year cycles. Based on the past, we have 2-year bear markets. But if there is a true adoption curve where, we get a blow off top, what if we get a blow off top and we just go? So there is a portion of my portfolio that is never touched because of the uncertainty. So for that reason, my cold storage, specifically Bitcoin, doesn't get touched. So when I make gains here, if it goes there, what I'm telling myself is when it goes there, it's not coming out. And that's part of, the retirement fund. I might take profits from it if things get really silly and I want to make my life better, but I'm not just going to hold a cash position with that, with the anticipation of buying back lower. This is specifically to make my life better, and I don't touch it. Okay. Thoughts on Serum seems to be trailing Solana along with Ray. So in the Wyckoff method, we follow the leaders. Okay, well, let's actually pull up a 3-way side by side right now. You have to follow the leaders. So if this is Solana, Solana is the leader. Let's actually make it let's make it a little less obnoxious of a color. There we go. A little less obnoxious. I'm going to turn the alphanumerics indicator off. Let's get that out of the way. Hell, let's just focus on price structure. Let's get the volume out of the way. Make it very clean, easy to read. So second to Solana would be Serum, SRM. Let's go to FTX, best exchange. If you're not signed up on FTX, please check out the links down below. I don't want Sol there. I want Sol on FTX, as it should be. And then finally, Ray. Turn the volume off. Turn the volume off. Okay, so now we have our three-way comparative chart. I'm going to go to auto here, and I'm going to put 1 year in frame. Go here, auto, 1 year in frame. Go here, auto, 1 year in frame. Okay, so we've got some pretty significant differences in these price structures. Right here, here's the shakeout, right? We have the shakeout right here. This is the market-wide shakeout, decline down into the seller's climax. Then we have an automatic rally right here. Let's make note of the automatic rally. Boom, automatic rally line right there. Let's make it nice and bright and bold. Okay, and then we're going to do the exact same thing on the other assets. So decline, automatic rally, boom. Decline, automatic rally, boom. So which asset is the one that you should be focused on? It's quite clear that the weakest one is Radium. Second to Radium is Serum. And the leading asset is Solana. So where a lot of people go wrong is they try to pick up the lagger, expecting it to catch up to the leader. And it's kind of the wrong approach, because when you're doing that, you're just buying the weaker asset. If we have a leading asset, let me just draw this freehand. Give me my pen tool. If you have a leading asset, the leader will crest first, right? Then you'll have a lagger, right? And the lagger will also crest at the same sort of point as the first one crest. And then you have even more of a lagger, so it can't get up. So you get more gains more often holding leading assets. Not only that, your signal as to when you need to leave that trade will come first and come at the highest gains. Buying laggers is really, that's a retail mentality. Don't buy lagging assets, buy leading assets, because the laggards start going after the leaders and they start declining at the same time as the leaders. So it's a very common mistake where people are like, oh, it's at this price. It's really undervalued because it's compared to this asset and this asset's doing so well. Don't waste your time. Really don't waste your time doing that stuff. It's far better to just buy leading assets. Not financial advice. KNC is another lagger. So structurally speaking, KNC is pretty weak. A lot of people not using that DEX at all. It doesn't have a lot of adoption at all. Keep it really simple. People don't care about KNC. So when the market doesn't care about it, it's not going to get volume. When there's no volume, it can't get appropriate price appreciation. So this is just another lagger. It's another lagger. When you compare it to other DEXs, honestly, I think it's a better DEX because it it doesn't pay you KNC tokens for staking. It pays you Ethereum for staking. But when compared to other dexes, it's lagging. And it's not a performing asset. It has low interest, it has low hype, and small order books. When the order book is small, you can't get markup. So until this starts outperforming, until this starts, ticking to the upside, the greatest driver of demand is price. So if we can continue to, mark the price up, you could see some outperformance potentially in KNC. A lot of the market is going to go up if we continue this bullish action. If we continue to head to the upside with Bitcoin, a lot of the market is going to go up. It's going to be dragged up, regardless of fundamentals or anything. So, KNC, it's one of the weakest dexes, but it's also in an uptrend. So I don't know. Dash is another kind of OG coin that, following that thesis of fiat onboarding and accessibility, Dash is very accessible. It's very easy to buy Dash. This is an advantage when you are in the later stages of the bull market, because basically what you're looking for is retail to just have access. If this is your first cycle, at the blow off top, at the conclusion of the bull run, at the end of the price cycle, it doesn't matter. Nothing matters. It's like, what's the crypto? Where do I buy it? And ease of purchase is really, really important for that. You can buy Dash on Coinbase very easily. Set up on Coinbase, link your account, boom, you bought Dash. You don't need to use a DEX. You don't need to buy Bitcoin and Ethereum and transfer it over to another trading platform to trade a special altcoin. There's no transactions. You don't even need to do a blockchain transaction, period. You do a banking transaction. The fiat onboarding system will be very powerful in the later stages of the bull market. So Dash, it's looking like it's had a multiple year accumulation. If you can get a break above this level right here, it's gonna go probably bonkers if you can get a break above $400 with volume. Structurally, it's looking not too bad, but it's lagging the market overall. This is very much so in the same sort of category as XRP. XRP, lagger. It's a lagger. Am I looking to it for a trade? Yes, but it also goes against some of the fundamental thesis of the Wyckoff method in that you don't invest in laggers. It's all about this theory of the ease of access to the crypto. So that's separate from the Wyckoff method. This is just my own theory where I think the coins that are going to be easy to buy are going to pump when the time is right. You can buy crypto in Robinhood. Yes, you can buy some crypto. And exactly, it's a very good point. Now, in Robinhood, you can buy crypto, but you don't own it. You don't actually own the coins. You can't transfer the coins anywhere. You basically hold paper crypto, but you're right. So ease of access, what's available on Robinhood, those cryptos are going to do well when the time comes because you have a ton of people on Robinhood. If the crypto market starts getting all crazy and marketed on CNBC and all this shit, people on Robinhood are going to mark up the price, even though they don't even hold the crypto. Okay, when you bought a coin very low, should you still be supporting that coin when it's more expensive to keep it healthy, or move on to cheaper investments? So I'm not sure exactly what you mean, but if you're wanting to support the project with your dollars, I think no. Play with the whales. When you're in a winning trade. So I don't know which coin you're talking about, but if you bought it low and it's higher, if you're in a winning trade, don't sell a winner to go and try and find another winner. Huge mistake. Huge mistake. Winning trades are very rare. A highly successful investor has a 30% success rate. So if you take 10 trades and 3 are successful, that's fantastic. Don't cut one of those 3 to go have another 30% chance of being successful. You have a 70% chance that what you take from that winner is going to be a loser. Ride your winners, cut your losers. Period. End of story. That is one of the best things that you can do as an investor when you are winning on a trade. Don't cut it to try and find the next best thing. Don't. It's one of the biggest mistakes you can make. Your success rate to pick a winner in a trading environment is very, very low. So when you get one, hold on to it. Hold on to it. Sushi is the biggest lagger. I think 1inch is doing much worse than Sushi. I think Sushi has a better leg to stand on than some of the other dexes. Uniswap's the leader, but structurally speaking, Sushi is actually leading Uniswap. Even though Uniswap has higher market cap, blah, 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 its structure, its price structure is beginning to actually outperform Uniswap. So I don't think, if you're a long-term Sushi holder, personally, I don't think you're going to be waiting that much longer. Not financial advice, but I do see that it is leading, structurally speaking. Okay, what do you think about Serum, and what exactly does it mean when a game like Aurora says powered by Serum? So Serum is basically, it's like a plugin. It's a plugin for a DEX. So let's say I need to start a game, and the game has a decentralized exchange incorporated into it. Instead of me building a DEX from scratch, I can just use the Serum and plug in. So it's just a plugin for my website so that I can run and operate a decentralized exchange as part of my offering without having to build the decentralized exchange. So Serum is actually really, really smart because they're making it very easy to set up these swap features, the exchange features on all of these different protocols. Radium Exchange uses the Serum DEX. It's the behind the scenes liquidity for these types of assets. So, if you have liquidity on one website and you have liquidity on another one, you actually share the same liquidity using Serum DEX. It's like the plumbing of all of these different websites coming together so that they all share the same pool of liquidity. Litecoin is a sleeping coin. Yeah, it's another one that will probably do well in the later stages, but it's certainly not one that you want to hold long term. Matic lagging behind. Matic is kind of ahead. Do you have any more targets for potential spot buys? Yes, there are countless signals in the market. It's just your ability to learn what is a good signal and what is a bad signal, and that's exactly what we teach you in the Traders Academy. There's a lot of bullshit out there. If you are at home trading and your chart has like 10 indicators on it, you have way too much noise. Price is the biggest indicator that you can have. When price is appreciating, it's giving signals every step along the way. Every time you break a resistance point, it's giving a signal. So strip out all the noise, strip out all the nonsense, simplify your trading so that you're able to spot the buys, and you don't have to ask a YouTuber, hey, is this a good time to buy? You'll know when it's a good time to buy, because in all honesty, it's you that needs to press the buy button. And the moment that you press it, you need to be confident. You need to know exactly when to buy and when to sell. You can't wait for confirmation of somebody else to say, yes, it's time to sell, because this market moves so quickly, which is why call out groups and signal groups don't really work. By the time the individual posts the signal could be gone. It's up to you to watch the assets that you're interested in and watch the buy signals as they come in and watch the sell signals as they come in. So if you don't have a strategy, you still have time to learn. But if we're to repeat previous cycles, you're looking at like probably a 3 to 6, maybe 8 month remaining of the bull market. But I would be conservative and say there's only 3 months left in the bull market. So please understand that, if your intent is to trade, you have to step up to the plate and, get some education. We want you to know that. How should I know? Hex. Oh, fuck. You're doomed anyways, man. You should learn. You know, the whole point of this channel is to show you, you know, the basics of the TA and see if you align with its simplicity and if you would like to learn the TA from me. Beyond that, it's up to you to be a trader. You know, there's a reason every YouTuber says not financial advice. It's because it's not up to us, it's up to you. So if you're looking for signals in YouTube, go back to the drawing board, because YouTube is the worst place to get signals. That is the oldest information that you could possibly get, is YouTube signals. I stream 3 days a week. That's 4 days a week that I am not giving you your signals. So please, you know, adjust your strategy. So why the hell would we watch you? You're hopeless, buddy. I am just gonna, you know, have fun with your hex. Thoughts on Rune? Fundamentally speaking or structurally? Let's just take a look at the structure. It's actually not looking bad at all. Let's go to the daily. It's still kind of, so here's the shakeout, here's the automatic rally. So we're seeing this all over the place. You have the shakeout, which is this large downtrend event, this large shakeout event, and then there's a rally off of that level. So, you know, you're wanting to get above 14 to get that confirmation, or you're wanting to get above 14 before it becomes something that is caught up. So in terms of structure, it's lagging a lot of assets. It's not a winning asset, it's just playing catch up. So because Rune is playing catch up, when the market turns, it's not going to have had the ability to make the gains before it turns around to the downside. So lagging assets, they're harder to get gains out of, because by the time they actually get going, the market shifts and they have a reaction. Fundamentally, it seems very good. Well, let's take a quick little peek. We're also at that point in the market where, again, I'll reiterate, the fundamentals don't really matter. Cardano is pumping on nothing other than speculation. So speculation is going to be the duration of the rest of the price cycle. Thorchain sounds incredibly powerful. Where did it go? There we go. Thorchain.org. This is just a quick glance. Decentralized liquidity protocol. Thorchain hacks. What happened and moving forward from the project? Okay. Swap your pool Thor. Introducing but sir interludes Rune. So it's a liquidity protocol. Now, does it aggregate liquidity? Yeah, I'm finding myself a little lost on this website. Tech. Explain like I'm 5. I like that. Witness transaction, finalized transaction. Okay, so it looks, yeah. Oh, okay, so it's going to be integrating with Bitcoin. That's good. We need Bitcoin more in DeFi. So if they can figure out a way to bridge Bitcoin into the the DeFi infrastructure that we have right now with Ethereum, Binance Smart Chain, and what have you, that's going to be pretty powerful. Now, again, you know, ride the hype, ride the price cycle. If they're able to do this, they'll probably be able to do it in the depths of the bear market when there are no distractions. You could front run this one, you could, you know, just get in expecting higher gains, but it is lagging, and that's probably they're just trying to shake off some of the negative sentiment of the hack. Also, they were hacked. Do you really want to, you know, trust large positions in a protocol that was hacked? There are many exploits in DeFi right now. And that's another thing that's kind of important for you to consider. If this is the last leg of the bull market, do you want to fuck around with shit that's going to lose your money? Do you want to get into protocols that are high risk for exploits, or do you want tried, true, proven assets that have ease of access and high market cap? If you think you can't 10x your portfolio in high market cap coins, you're very wrong. I mean, we just earlier in the show talked about how standard practice turned 5K into 55K in Bitcoin. Just Bitcoin. You don't have to trade these illiquid, risky altcoins where, yeah, you can make some good trades and then boom, it's all gone because of a hack or an exploit. And what if you get hacked at the top of the market and there is no way to recover? Stick to the safer stuff would be my opinion. Do I think the chart's not bad? Sure. But, stick to the safe stuff. Dash versus Zcash, Monero. Ruin height, giant cup and handle on XRP. Massive. XRP, if it breaks out and gets some demand behind it, I think can do very well. Icon fundamentals. Geez, I can't even believe that's still a coin. Why does this have to be the last leg? Crypto is very new overall. Very good question. The reason it has to be the last leg is because of humans. Humans are greedy and they overprice assets. So the price cycles are not based on the adoption and the fundamentals of the technology. It's based on the greed of human beings. Price is secular because of greedy humans. That will never change. So, if there is price appreciation, if there's hype, there is going to be an overpricing of the market. That will need to be corrected with a loss of funds and an underpricing of the market. And it's going to take time for the humans to emotionally repair their brain from that. And the emotions associated with high loss take, at least a year to repair from. So these bull and bear cycles, they have nothing to do with innovation. They have nothing to do with fundamental drivers. They have to do with the greed of humans. And that's not going to change. You want to teach people how to make money? You begging for money here? I'm not begging for money. I actually started this channel to teach people and give them the opportunity to learn. If you're willing to invest in yourself, you have two teachers here. You can either hire a professional for mentorship that can help you avoid some of the mistakes that are very common, or you can let the market teach you. It's up to you. You can honestly go fuck yourself. I don't need you here. If you want to, if you want to learn by yourself, the market is a fantastic teacher, and I wish you the best. Unfortunately, you're a fucking moron that, thinks Hex is a good idea. So have a good one. Do I like Chainlink? Yes, I do like Chainlink. I think that oracles are very needed in the space. They bring real world data, most commonly price. So Chainlink is bringing price information from the exchanges, from the order books of the exchanges, and bringing it into DeFi so that when you go to Uniswap to make a token swap or something like that, the price is appropriate. We can't help everybody. Don't worry about sin. Okay, we have got to get into the virtual classroom. I've got time for one more. Let's take a look at Matic. Matic was requested earlier. Let's take a look at what's going on. So we are up against the automatic rally for Matic here. Let's just draw it again. I don't mean to be so abrasive. I hope I didn't offend anybody by calling that guy an idiot. I just don't need that here. I do make a living with trading. I make a living with my investments. You know, the trading group is probably realistically 20% of my income, and the reason I accept money is because my time is valuable. If I'm going to be trading my time, you know, to help people, I expect something in return. I'm not going to do this for free. So automatic rally, we are below the automatic rally. Watch for a breakout here at $1.62. So if you can get a breakout on volume above $1.62, that's going to be a confirmation. So I'd be looking for a daily candle close. If you get a daily candle close above this line, because right now it's all wicks, as soon as you get that daily close, that's a buy signal. And it's really as simple as that. You don't need, you know, RSI, you don't need MACD, you don't need any of that to warrant a buy signal. Just getting a daily close above a new level, proving a trend change is enough. The question is, will I be as successful as a trader as you if I follow your advice? Trading, so this is a very good question, by the way. And there is also the opportunity for you to be a better trader than me. I am not claiming to be the best trader in the world. I have the ability to make money, and I have the ability to make a living, and I can, you know, extract income from this market. But trading is a long game. It's a long game. It's going to take you a few years to become profitable. I'm not going to sugarcoat it here. I'm not going to say, you know, hey, come in and, you know, 1 month you'll be a trader. No, 1 month you'll learn a lot, but in 1 month you will not be a trader. It's a journey. There's going to be losses. That's part of it. You think of it as your tuition. What kind of defines a trader is their ability to keep getting hit and learning from those mistakes, reflecting on those mistakes, and making sure that those mistakes don't happen again. And we can help you just not hurt yourself a lot while you're on that journey. A lot of people go all in. A lot of people put in too big of a position into too high risk of a trade. They don't think about risk management. They only think about the gains, and they whittle their account away too quickly. You have to be in this market for at least a full market cycle before you're really pulling a profit out of it. I'm not going to sugarcoat it. You know, that's the reality of it. So yes, I think that not only could you, you know, be able to get to the point where you can make a living for yourself, you can also get to the point where you might even be a better trader than I am. There are many traders who are better than me. But I have a strategy that works. It might be more conservative, and it might be less risky, and it might be a longer game that's kind of mixed with investment. But that's my strategy. You know, when you find your strategy, you pick something that works, and when it works, don't touch it. Don't touch it. Gains are made in the bear market, so I'm late to the party. Time for Phantom? I think so, but it is also time for me to get out of here. So if you guys enjoyed this content, please leave it a like. Don't forget to subscribe. And if there are any projects that you would like me to take a look at, leave them in the comment section down below, and I will see if I can get to them. If you are interested in joining the Traders Academy, links below, or go to the cryptojungle.com and use the coupon code WELCOME. Thank you all. Trade safe. It's a jungle out there. Peace.
Bye.